Hey traders, Nick Shaheen here looking at Wayfair. W is the ticker. This is a company that I disliked a lot, and then it went from basically under 20 bucks to 300 and change in no time. And then I thought it was, egregiously priced, and then I checked. They basically, it was somewhat justified because of what happened. The quarantine basically bailed them out, along with a lot of other retailers. I don't know if I want to call Overstock a retailer, but yes, Overstock was one of them. So what about now? We did trade it several times with good results. It depends on how you traded it. I like to sell puts and put spreads into stocks that are falling. I think we also swung high with this one, but currently I don't have a trade in it, and somebody still has in my chat room, which I have a link to below, still has a trade on it, and they want to see if they should ditch it, book the profits, however much they are, or what. So I said, I don't know much about it, but if I'm ever wondering about booking profits, I usually do. And then I looked at the chart. So there is a decision coming. So I'm looking at the chart without my lines. Let me reset it here. Okay, so this is about a year's worth of data and a daily candle. Nothing fancy. So we have lower highs butting up on what looks like wants to be a floor, but the whole zone was a neckline from the end of July. So it should be a floor. Usually if this was a stock I loved, then this would be a place to get long for a swing. I like to see when a slide stops making lower lows. In this case, it looks like it has. I like to see it when it starts making higher lows. I don't have evidence of that. I mean, I see a couple of higher ticks, but we don't know if they're going to revert lower because they haven't breached the descending channel, right? You can draw a channel down here, but it's a good start. So I don't mind seeing lower highs when it starts making higher lows. Then they come to a pinch and they blast out of it, up or down. So the pinch is not guaranteed up. They have resistance through 260. To pinpoint a value. 268 should be really hard. I know there's a big gap above it, but that's why it's going to be hard. But once it happens, it should be easy to just whoop to 300. And then that 304 would be another battle up there. So having told my buddy to get out of the longs because I hadn't checked the chart, but that was the safe answer, maybe not. So I'm going to go back to him and say, it's up to you, man. I don't know which way they're going to break. I can tell you that the range is tight and the move is coming. Whether they lose this one and go down to 180 or they break out and they have a two-step process like I just mentioned and they go above 300 eventually. So that's the play. Now, fundamentally, I haven't checked it recently, but I tell you the holiday season, I think it's going to be stronger than people realize. Everybody's so gloom and doom, and I think there's way too much money in the economy. I know people are saying, what are you talking about, man? There are like 8 million people out of work. I question all the data. There's not 8 million people out of work. They are recorded as out of work, but either by choice because they're getting too much money from the government, or they're working and collecting unemployment at the same time. Not cheating. That's how the rules were done this year. There's like loopholes everywhere. I know from people I know at the gym, which is basically my social life these days. I don't do anything. So there's more money floating around for whatever reason, if I'm right or not, but there's definitely, people are buying more stuff at higher prices. So you look on Instagram, everybody's posting new shoes, Nike this, pants that, Gizmo this, and car that. So there's money being spent. The small business is dying in like little town, not little towns, any towns. I live in Southern California, and we just shut down again. So the hairdresser cannot do anything anymore. Restaurants are shut only for takeout. Again, they spent money doing their outside, and now they can't do anything. So yes, there's a struggle there. But at the personal spending level, and by the way, that part is 70%, according to, not me, the government, 68, I think, last time I read it, percent of the economy. So if you give $1 trillion to people, they will spend, in theory, 70% of it. It will have an impact at a 70% ratio into the economy versus hit the P&L of businesses with a drop in sales, that drop in sales has to trickle through the P&L. So really the effect on the bottom line of the economy is tiny compared to the huge effect at the spending that happens at the company, at the countrywide. Now, that spending is going into concentrated companies. I get it. The online retailers and all of that. But this is an online retailer. And if there's anybody who benefits, so I guess I'm arguing for it. Price to sales is 1.7. I don't know if that's true or not. If it is, that's super cheap. Super cheap. That's cheaper than Amazon. And it's probably 100 times cheaper than Snowflake. 100 times. No joke. The Snowflake is probably 200. So I know they're not the same companies, but they give you an absolute... Oops. Sorry about that. Wrong window. Let's see. This is Benzinga Pro desktop. 224. That is insanity. Insanity. 224 years of sales are baked into the current stock price of this company. This one is like 1.7. So reasonable pricing right there. I don't care about the PE. So here we go. Back to the chart. There's no reason to short it fundamentally. So if I were to guess, I think it's going to pop. But do I think it's going to pop enough to say, hey, let's get long? I would put a small amount if I want to bet on it, or if I don't have enough longs. Like if I'm already long Amazon, I don't need to be long this one. Or if I'm already long OSTK, I don't need to be long this one. How can I get long without money out of pocket? I can sell put spreads. So if I own calls and I want to bail out of the calls, I can take them off and sell some put spreads and create income out of nothing. All right, so let me see what kind of lines I had on it. I haven't updated this in a while. So clearly, because support failed, right? So needs to hold else 180. So I'm consistent. I just said that earlier. So I can extend this line over. So the idea is that they should hold the zone. It's not a hardcore line in the sand because it has several peaks. But this could happen down. By the way, this yellow line I drew right here. I said we have a squeeze, higher lows, and a roof. Something is going to happen. Either they break out or they fall down. How did they fall down? I thought they would fall. They would try to bounce. They will draw an inverse, a cup and handle of sorts, and that's why I drew this tail down to here. So they held above that. That's a good job for the bulls. And they kind of had a mini pop. So they are fighting hard. It's not going to be a lay down situation for them. So I like it. It's like not as strong as the Palantir people, but but it's definitely good. So not ideally, what would happen if it triggers below 221 and change? They might invite some sellers and they might zigzag down. I think there's enough room here, enough appetite for it here, that even though the downside should be like lower, I think it will hold the 180. So I'm just going to stop here. Basically to say there is downside risk, but it's not imminent. And if it does, they should have support. Now, the opposite of this yellow thing here, I'm going to do this. Ideally, I prefer to see level breaches to chase, but I can draw it this way. So sorry about that jankiness. I'm doing 3 things at the same time today. Okay, so something like this to make it prettier. Personally, I prefer to see a breach of levels. So this was a giant fail. I would like to see them take it out first to believe it. But some people like to chase the trend break versus a level break. Trend break, level break. So I'd be missing out on a few bucks. But that's fine. There's a lot of bucks to be made. So that's the extensive look at. This stays true. Now this becomes a resistance zone. I just changed the name and move it forward. You've heard it before. Prior support becomes... What is going on today with this software? TradingView, by the way. Okay, so I can't use the arrows. Am I not on numlock or something? Anyway, so resistance. Prior support, they lost it. Now it's a problem on the way up. There's another one above it too. Yeah, you can put it here, but I'm going to go above it. This is definitely a prior support zone. A resistance, but also a trigger. That still is true. So I guess I should do that. All right. Open air above. Well, that's long gone story-wise. Good shorter term levels. Now, speaking of short term, some people are really actively trading. This is a 120. 2-hour chart, so you can see the peaks that they have to overcome short term versus the bounces that they just overcome short term. So there's the battle. They're fading the pops and hopefully keep on bouncing off the bottom. Otherwise, it could trigger a slip below. All right, next signing out. Oh, if you like what you see, subscribe. I haven't said that in a long time to the channel. I appreciate it. The channel has grown a lot. I can't believe it, but I think we do good work. And if you'd like to join the chat room, there's a link below. It's got 10 days free, but the transaction goes through PayPal, so don't be freaked out that you see PayPal. It's a $0 transaction, but I need to protect my community, so I want to weed out the trolls. Therefore, to have, continue to grow. We're over 220 and change, We have half a person, but there are no jerks. They don't stay. They feel out of place and they just leave. And I've actually kicked out only 2 in a matter of 7 years. Been around since 2012 in there. All right, Nick signing out.